companies are in trouble. There's one car company, at least this week, is not in trouble. That's
Right.
Tesla,
Yes.
that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car, and it's really terrific, it's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast, and the numbers have gone up dramatically, and yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018 17% global market share, including China. That it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So do you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
But that makes you think that this isn't actually a vote for Tesla. It's a vote in all these other established car companies completely failing to make the crucial transition, which they've known for several years they were going to have to make.
Yeah,
I mean, can we really be that pessimistic about the likes of BMW?
They're failing miserably. And in battery technology, they're not riding down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months, 2 years, the price of an electric vehicle, like for like categories, is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline. So the traditional auto manufacturers, if you look at their R&D budgets, or you look at GM's, 10% of its R&D, $25 billion in, capital spending, is allocated to electric. They should be at almost 100 now, given what's about to happen. And I think the reason Berlin, Germany, invited Tesla to build a factory 200 football fields, either soccer or our football, that big, is because they know they're in trouble. They've got to adjust, or else they're going to lose a tremendous number of jobs.
Should you buy Tesla stock in 2023? The top EV business always attracts the attention of the investment community. Many tech stocks have performed incredibly well in 2023, including Tesla, whose shares are up by an incredible 110% as of the first week of August. And having a favorable market environment has also helped, because as evidenced by the Nasdaq Composite Index's 34% rise in the year. Now, the Nasdaq's composite doesn't go up 35% every year, which tells you that it's not just Tesla that has performed well in 2023. Many tech stocks have performed incredibly well as well, as I've covered in my previous video about how Facebook has generated some massive returns in this year as well, almost equivalent to Tesla. And investors are likely warming up to growth stocks again following a very difficult year in 2022. A lot of my favorite stocks fell down incredibly high, like they fell by 30 to 40% in 2022, and that can be a scary situation for many investors who doesn't know that such situations are bound to happen. Like, just because Tesla stock performed incredibly well in 2023, I think a mature person and who's seen a lot of the stock market would tell you that you shouldn't be surprised if a couple of years later Tesla has a difficult 4 to 6 month period where the stock goes down by 20 to 30%. Now, once you become experienced and you see those situations more frequently, you get used to it and you don't panic as you once did. So is the business a worthy addition to your portfolio today? we're going to talk about, if you haven't bought Tesla yet, is this the right time to buy Tesla stock, which is already up by 110% in the first 7 months of 2023?
Don't you think it's a little early to count the traditional companies out of it? I mean, they haven't really almost gotten started.
So
the Taycan
that
is how
is
old?
the problem. That is the problem. They have just gotten started, and what they have delivered are cars that don't even meet whether it's range or other metrics. The Model S circa 2012. Now, of course, there are three other advantages Tesla has. So battery's one. Second is they have their own artificial intelligence chip. And our analyst, James Wang, who worked at NVIDIA, the artificial intelligence company, for 8 years, looked at the specs of this chip and said, oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And that's important because we're going autonomous with electric. And autonomous is an artificial intelligence project, right? The winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, has 20 million. So and then the last is Tesla is the only auto manufacturer still that delivers over-the-air software updates to modify performance.
Now, if we look at the recent trends, Tesla did beat Wall Street estimates with its latest financial update, generating a revenue of $25 billion and diluted earnings per share of 78 cents. The business also produced 480,000 vehicles during the period, which is up 86% year over year. And however, shareholders were not happy to see that Tesla's gross margin has gone down from 25% in the second quarter of 2022 to 18% in the most recent quarter. So that is down from where it was last year. Tesla's gross margin in the previous year was 25% and now it is 18%. So now this is a cause for concern for the investors. And the management was forced to cut the prices of cars multiple times this year. And that is the reason why you don't have a lot of gross profit margin. And I think you should understand why they had to do that. They had to do that in an effort to boost the demand at a time when consumers have been dealing with high interest rates and inflationary pressures. And Warren Buffett always said that. Now, when you look at the company, when you're analyzing a company, what you should also look at is the economic situations. Now, with higher interest rates and inflationary pressures where prices of commodities are going up very frequently, how many people would go ahead to buy a Tesla? So even the people who would normally want to buy a Tesla with this high interest rates and inflation, people are likely to postpone their plan of buying a car. And in that time, if you offer your car at a discount, then a little bit more percentage of people are likely to buy. But when you do that, sure, the sales are up, but the gross margin also takes a hit. But I don't think Tesla did anything wrong here. Warren Buffett always said that you should always operate in regards to the economic situations of the country. And so the pricing cuts certainly deserve a lot of the blame for the shrinking operating margin too. And however, Tesla's research and development expenses of $943 million during the quarter, which were up 41% year over year, hurt the profitability as well. Tesla wants to grow rapidly and Tesla wants to be ahead of the EV race, which means spending a lot of money in research and development. And those expenses were at a tune of $940 million, almost $1 billion. Tesla spent almost $1 billion on research and development in one single quarter, which was up 41% as well. Now even the margin is high, and even just imagine spending $1 billion a quarter on research. Now that takes a lot of toll in the profitability as well. But in the long run, the $1 billion spent in the research and development would be very much profitable. And though people can't see it today, the $1 billion spent today on research and development in a quarter won't go to waste for sure. And the benefit of continuously spending heavy money on research and development is that it can maintain Tesla's lead as a trailblazer in the industries, which Tesla needs to do so that its market cap does not go down to its competitors. So this is very crucial for Tesla, which means it is crucial for all of the investors like us as well. Now, looking at the bigger picture, Tesla has quickly become a powerful brand in the technology and the automotive sectors. known for its massive innovation, disruption, and forward-thinking designs. And additionally, thanks to the company's brilliant investments in building up its manufacturing capacity, it's starting to develop a cost advantage when making automobiles. The company is profitable while a legacy automaker like Ford constantly loses money in its EV division. Now, this is something that Cathie Wood mentioned a couple of years before, that even for companies like Ford and GM to compete against Tesla, they will have to operate at a margin of loss. They'll be losing money while trying to compete with Tesla. And that is why Ford and GM could never become a competitor to Tesla. And having this competitive advantage puts Tesla in a position to make progress towards Elon Musk's long-term goal centered on autonomous self-driving. And while Tesla does sell cars with its branded full self-driving FSD capabilities, they are not fully autonomous at this point of time. This means that right now, a driver still must pay attention and be ready to intervene and take full control if necessary. And if full autonomy is achieved, something Elon Musk believes could happen later this year, but even if it happens a few years from now, it could be a huge financial advantage for Tesla. That's because this software, coupled with Tesla's expanding manufacturing capabilities, could really turn the company into a provider of robo-taxis, which could experience unprecedented demand from consumers and drive outsized revenue and earnings growth over time. And then the Tesla stock price will all make sense for everyone. And now this might be a too far-fetched goal for Tesla, but if it achieves that, the amount of changes it could bring to this world and also the revenue Tesla could be making would be enormous. And the short-term vacancies in gross margin and profitability really they're pretty minor at this point relative to the long-term picture. And in the Q2 earnings call of this year, Elon Musk said that autonomy will make all of these numbers look pretty silly. He has been overly aggressive with his timing deadlines before, so who knows when and if it will happen, but when it does, but it's also pretty hard to bet against Elon Musk at this point. And thank you so much for watching. I hope you all have a good day.